Now, I'm curious how that extends to specifically the sort of investor work relationship or collaboration dynamic, right? I'm curious what both of y'all think of just generally to what extent should or do investors involve themselves with the companies they invest in, like an active management, right? And how does the involvement of investors, whether heavy, kind of in the middle, or hands off, impact in y'all's experience a company's growth and development? So again, give us the kind of like, what should they do? And then how that involvement actually, whether hands-on or off, impacts success and growth.
So, investments are kind of like children. They're not all alike and they don't all need the same thing. And we try to focus on, what does the company need? And it's not necessarily that more communication means you have a weaker company, a weaker investment, or a weaker management team. It just means that they need a little bit more, or we need to be in closer touch. So when we're underwriting an investment, we're obviously underwriting a management team, right? These are the people who are in charge of this company. They're going to be making the day-to-day decisions. It's extremely rare that we say in our investment memos, man, it's a great company, but the management team is terrible. We should invest in this company. We underwrite that management team and believe they're the best people to run that company. And we don't try to micromanage because we don't know how to best run that company. We don't know what the most important aspects are, who the absolute best employees are. We have a sense, but we don't have as great a sense as those management teams. So what we try to focus on is, what does this management team need to succeed? What can we provide? And more importantly, at times, how can we get out of the way? Now, we are always sort of there to provide resources if they need them. If there's an ask, we're happy to do it. We have the interactivity with our management teams. I have one investment where I speak to the management several times a week. And then there are others that it's once every 3 or 4 weeks. And that's all fine. It's based on what is needed at the time and what they need from me and from us at Ghost Tree. So there isn't really one template where you say this is exactly the way it's supposed to go. I think more communication is better than less, especially when times are a little bit more difficult. But in general, we try to, as we like to say sort of kiddingly, we take the Hippocratic Oath. We want to do no harm. We want to help out wherever we can, keep management focused on important things like liquidity, cash flow, and the structure of the debt itself. And then help wherever we can in the business. And if that means an industry connection, or, hey, I just heard this, what about this company? What about this partner? That's where we try to help out and not get in the way.
Yeah, I think to second that, I think what I was going to say is very similar, David. Like you just don't know, right? It depends on who the investors are. What are they good at? What can you use them? It's like, like they're looking at investing at you. You've got to look at the same way. Like, how can they help us? And just as an example, like Ghost Tree is a good example because we have good lines of communication. And it was sort of like, we don't want to affect you. They understood, like, we have a machine here. This machine is chugging along and it's great. And we didn't need a lot of hand holding in that way. But it's great because we can go to David and get some financial input and even some business input and the team that, is a really useful resource. There are other groups that we looked at the beginning that we could just tell this was going to be a train wreck. All right, we need a monthly review process, et cetera, et cetera. And like he said, the Hippocratic Oath, I think that's actually really clever and appropriate here. Like sometimes if you're not careful, your funders can get in the way. And you got to be careful about that. You got to be honest with them. And I think open lines of communication will help. But then again, you've also got to be very particular about who you bring in to make sure, A, they can help you and be focused on what they can be, and B, that they're not overly so because they can hurt you as much as they can help you. So it's a weighing game. You got to weigh your pros and cons either way.
Now, David, just to get a little bit more anecdotal context here before we move into the position imaging story specifically, you don't have to disclose company names. Obviously, we can keep things, anonymous here, but can you share an example of an investment that you're particularly proud of, right? That sort of captures this dynamic, that captures the open collaboration, the sort of clear vision, the ego at the door, the right kind of Goldilocks balance of investor attention, but hands-off trust. that led to company growth and company success? And, if you had to pick apart what worked and why?
Yeah, absolutely. I have an example of at a previous firm where it's perfect because we basically had two similar companies that were mirror images of each other, and I'll explain why. They were both companies that were focused on the same end market. One was a little bit more trade secret oriented. These were both high performance chemical companies. One was more trade secret oriented, good formulations, but nothing really patented, nothing really trademarked, just, going forward and sort of growing the business. And then subsequent to that, we had another investment in the exact same space that was very patent focused and very focused on structure and how they went about their intellectual property and protecting it. And the other part that was an interesting and a mirror image of each other, the company that was a little bit more trade secret focused had a very aggressive management team. They were very intelligent, very good at what they did, but their mandate was to grow at all costs. And that's what they focused on. They acquired a bunch of businesses. They built out their own sales team. They knew that they could do it better than anybody else. They took on all this cost and all this complexity in order to massively grow this business. And every time they talked about the business, it wasn't how the business was doing. It was how they were creating value at exit. It's like, but we're invested in the business right now, so why don't we talk about that? No, it was talking about the growth. On the other hand, the team that was focused on intellectual property was extremely methodical. They were really focused on minimizing risk, maximizing return, but minimizing the risk to that investment and the company itself. And they did that by growing with partners. They didn't build out their own sales team. They didn't go hire 100 people to go sell the products. They said there are all these large companies out there that are already selling products to our customers. Let's just use their sales force. It minimizes our risk, increases our breadth of coverage for all these potential customers, and we don't have to take on the cost. And one company would say, that's ridiculous, you're giving away margin to another business. And the more conservative company said, we are, but we're really minimizing our risk while maximizing our growth potential. And I heard this saying after, and it was so apt to these two businesses. But if you want to travel fast, travel alone. If you want to go far, go together. And the company that traveled fast eventually had to get broken up and sold off for parts because they took on too much capital. And the one that traveled together, the one that went together, they went far and they ended up going public. So, there's a mentality of, I can do everything right. I know exactly what to do. And then there's this humility of, I don't know exactly what to do. I'm really good at this. I don't know exactly how to fully commercialize or to build a sales team or, build the marketing program. Let me figure out who's the best partner to work with to minimize my risk and maximize my return. And I'll go with that person. I think there's something incredibly important and powerful about that partnership model and doing things with people who have already demonstrated expertise in that field rather than saying, having the hubris to say, I can do everything. I am really good at this thing, so I can be really good at all these other things.
All right, now let's apply some of what we've learned so far on the podcast as context and character and color to a deeper discussion on the partnership and dynamic between David and Ned here, between Position Imaging and Tree Partners, and this story of investment, funding, and growth that has led to a lot of success for Position Imaging. So, David, we'll keep it on you. Ned, I promise we'll get back to you here in a sec. But David, how did Position Imaging initially catch your attention as a potential investment opportunity? Did someone recommend it your way? Were you already on the look? Did Position Imaging reach out to y'all for advice or potential partnership? What's the story there?
Yeah, sure. So it was a recommendation. We have a partner that helps us with our IP lending. They help value the intellectual property, specifically patents. And they have this great network of brokers and people in the industry who know that certain firm is looking for financing, right? Whether it is a casual, hey, I met this person and he has a company that is looking for financing, and this is what they do. So they caught wind of Position Imaging, and we had an initial conversation with Ned. Gosh, it was probably about a year ago, I believe.
Yeah,
looking at the time frame. And we had a bunch of initial conversations, and unfortunately, it's probably really laborious for Ned to have to sit through 3 1-hour phone calls while I ask all these questions about his company. But the more and more sort of we dug and sort of understood what the company did, what was attractive about it, the moats that it had, and overall writ large the space. Computer vision was not necessarily my domain expertise. But we have a nice network of experts I had to go a second layer beyond our sort of network of experts to talk about computer vision and fully understand what position imaging does and what makes them so unique. But as I was having those conversations with Ned, I was having those conversations with our sort of range of industry experts and really understanding the value proposition of the company and really understanding how unique it was and what it could offer.
So you kind of mentioned it there in your answer, but a patent portfolio and a robust, very forward-thinking patent portfolio was key to attracting, your attention and avert your focus over to position imaging. But I'm curious, Ned, give us a little insight into building that portfolio, right? Even before you were looking for funding for further growth, or maybe, you'll reveal here in your answer that building out your portfolio was, honestly done with that funding long-term strategy in mind. Whatever it might be, walk us through your headspace for building out that patent portfolio, and was said funding journey already front of mind as you were, rounding out that portfolio?
Well, a funding strategy has to be front of mind if you are a CEO, right? I mean, it just has to be, and everything you do has to be focused in some way, shape, or form on the funding. For our IP portfolio, it really was twofold, right? We were doing and are doing some really cutting edge technologies, and we have a pretty expansive patent portfolio. That was done for two reasons. Number one, we knew that if we were going to compete with the likes of some of the biggest companies in the world, which is who we really compete with, we work with as well. But to get taken seriously, we were going to need some, as David puts it, a moat, right? We were going to need some protection. Otherwise, they'll just either take it or they wouldn't even work with us, because why work with us if you don't have something unique that is protectable? And so from a commercial point of view, you really, you need something to protect yourself and to be taken seriously that you've got something unique. So on that front, I think patents are crucial if you're a technology company. And then on the financing front, I think it's twofold as well, right? Number one, somebody's going to need to know that whatever you've created is unique if you're funded. Otherwise, what are we doing here? It's crazy. So you need to have something to show that this uniqueness is protected and it's a value, and a patent's a good way to do that. And another thing is, if you're, especially on the venture debt side, there needs to be some collateral, right? There needs to be some asset, especially if you're not producing the revenues yet, because you've spent, like we did, a tremendous amount of time and money on building our technology and our IP portfolio. You need to find somebody that understands the IP portfolio, the technology base that you have. And this isn't just patents, right? Ghost Tree, just an example, dug into the copyrights that we have, the trademarks, all the things that we put together in our IP portfolio to see the value of it and the sheer breadth of it. But that's the other thing. There has to be some kind of a protection for these guys, which is completely logical. Otherwise, they're just, if something goes awry or the CEO gets hit by a truck or something, where are they going to go for protection on their investment? So always looking at building the IP, some for protection, some for credibility, and certainly some for financing. It all sort of bundles together. But there's no reason. In fact, I think if I was an investor and it was a technology company and I found out that this company had no aspirations to secure some patents, that would be a huge red flag that I probably could never get over myself.
Yeah, it's a very good point, Ned. I think, as you said, we were looking for that moat. I think there's plenty of intellectual property out there that could create a moat that isn't necessarily a patent. It's just that the patent is the easiest one to prove it, as Ned said, right? You have a legal document that says this company has a claim to this process or this material or whatever it may be that no one else can violate. And if they do, you can go after them. There could be a company that is loaded with trade secrets and fantastic software that's not patented that would be and would have incredible moats that could not be recreated. However, it's really hard to prove that, in a relatively short period of time, over 6 to 12 months, if it's not patented or there isn't some sort of documentation or proof that this company lays claim to that intellectual property.
Yeah, and the other reality, the other sort of issue on that front would be like, if you're a small company, guess what you are? A small company. And so if you have no protection and you're going to go up against an Apple or an Amazon or, who knows, Walmart, and you have no protection, you don't think that they could put 100 engineers on the same thing and then beat you to it? If you're not, this gets to a different question about constantly innovating, which is what we do here at the company. So we're already thinking 3 steps down the road after we've invented the next thing. But regardless, you're talking to people that have huge amounts of resources. And if you have nothing to protect you, they will catch you.